Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. A day of consolidation. We've been very steady today. 40 points higher on the Nifty. Midcaps, they're underperforming, but they have gained some ground from the lows of the day. Banks too are doing well, but that will be the case. Consolidation before the Fed results tomorrow. But yes, the last 1 hour will be very important today.
Last 1 hour is going to be extremely crucial, and it's a very choppy trading session going into such an important event. Quite a lot lined up on the show, so let's start off with the top headlines. Frontline stocks trade steady a day ahead of the US Federal Reserve's rate decision. Metals and realty are the big drags, even as IT stocks gain. Midcaps trade in line.
City gas distributors, Mahanagar Gas and IGL both surge over 3.5% after UBS issues a bullish note on the stocks. Upgrades IGL to buy from sell, raises the target price to 700 rupees. Also raises the target on MGL to 2400 from 1600 rupees, citing an improvement in volumes.
Ola Electric zooms in trade after a slew of positive brokerage notes. BofA Securities and Goldman Sachs initiate coverage on the stock with a buy call citing multiple growth triggers.
And the new kid on the exchanges, PN Gadgil Jewelers sees a strong listing on the bourses, listing at a premium of 73%. Management tells CNBC-TV18 that they expect margin improvement through increase in studded ratio.
Neogen Chemicals surges over 12% after Aventis Park initiates coverage on the stock with a buy rating and issues a 3-year target price of 4,900 rupees a share.
Okay, all right. So let's talk about some individual names which are doing really well. When I said mid-caps, they have recovered quite a bit from the lows. Some interesting movers in the broader markets. What's doing well in the sectoral movers is the consumption space again. Nifty IT is contributing yet again to the gains that we are seeing right now. As I said, banks have been doing well. Energy space has made a comeback as well. But the small caps and mid-caps, they have come in some for profit booking. But again, if we talk about the individual names which Hormaz will in a bit, there are big moves there and high volumes as well.
That's right, high volume, big moves. Hormaz is standing at the wall. He'll take us through all of the top movers as far as the mid-cap place is concerned. Hormaz, over to you.
Well, it's been a bit of a consolidation within the broader markets as well. You don't usually get to see that. But then, yes, the mid-caps and the small-cap indices are in the red as we speak. So we will start off with the losers then within the broader markets. And those stocks mostly are being the high-flying names in the recent past, and they are seeing some bit of profit booking. There you can see Godfrey Phillips now at the lowest point of the day, ahead of the board meeting to consider a bonus issue of shares, 6% down there. Apar Industries, Triveni Turbine, PNB Housing as well was up in the last few sessions. Now at the lowest point of the day are all three of them seeing losses of anywhere between 2 to 5%. A lot of brokerage commentary coming in through the morning, and it's been one of the high-flying names. Bajaj Housing Finance, another 10% upper circuit, second day of positive moves for the stock now, 180 on the stock after an IPO price of 70 rupees. Ola Electric making a comeback after declining almost 30% from its peak, 10% higher today, and Adani Green Energy as well seeing a positive initiation note from a brokerage at the highest point of the day. The chemical stocks have been doing very well in today's session. Neogen Chemicals also on the back of a very positive brokerage note coming in, 12.5% higher for that. Aarti Surfactants and Himadri Specialty as well having a good day at the office. Stocks that are doing well on the back of volumes, and Blue Dart is one of them, 12% higher on very strong volumes. IGL and MGL are off the highs of the day. Even they are stocks reacting to a positive brokerage note, but also holding on to gains of around 4%. And Electra Green Tech is seeing gains of around 4% on very strong volumes. And lastly, some other movers within the broader markets. BASF at the highest point of the day now, 4% higher. And PB Fintech, the stock has nearly doubled from its IPO price, now another 4% higher today, 1860 on the stock with strong volumes. Back to you guys.
Yes, big moves there. And one more stock that keeps on buzzing, it's Zaggle Prepaid. That stock is up 9% as we speak. Hormaz, thank you so much for joining us with all those details. But yes, some of those big moves that we are seeing on Zaggle as well right now. It's a good time to welcome Aditya Agrawal from Invest for Edu for a technical check on the markets. Aditya, good afternoon. What are the next important levels? Do you think it will continue to remain choppy for at least today?
Good afternoon, Sonal. Thanks for having the show. I think so. Markets will remain choppy. If you take a look at the way last three trading sessions have played out, at least for the Nifty, it's not able to cross that hurdle of 25,450, 25,500 mark. And Nifty has been forming small real body candles, which is a sign of caution for sure. We call it hanging man candlestick patterns in technicals. So after a decent up move, you get a series of hanging man candlestick patterns on the chart structure. That tells you one should remain a little cautious. However, the undertone still remains bullish for the market as we see a lot of sectors and stocks, individual names outperform. Like you mentioned, IT is doing well, FMC is doing well. NBFC stocks are doing well, even the banking select stocks are doing well. So I think traders should remain a little cautious as far as the index is concerned. You can build positions in individual stocks and sectors till the time Nifty crosses 25,450 decisively and crosses and closes above that. I'm not looking at going fresh long on the Nifty per se. Talking of the bank Nifty, 52,300, 52,400 is acting as a hurdle for the bank Nifty. And since bank Nifty has seen a decent amount of outperformance in the previous week and then the start of this week itself, I think bank Nifty can enter into sideways consolidation phase at max and may cool off to 52,000 odd levels. That could be a good entry point for the bank Nifty.
Good afternoon, Aditya. What are your top individual stocks for the day?
Good afternoon, Vivek. So I've got a couple of buy recommendations because I mentioned the undertone remains bullish. So the first stock is Adani Green. If you take a look at the way the stock has bounced back in trade yesterday on excellent volumes, and in trade today as well, stock is up on excellent volumes. So back-to-back 2 days of strong volumes. It's on the verge of a breakout from a hurdle. Once it does so, stock can easily test levels of 2160 to about 2200. So my first target will be 2160, second target 2200 on Adani Green with a stop loss just at 1830. It's a buy recommendation. The second is from two-wheeler space. Moto looks extremely bullish on the chart setup. At current levels, one can initiate fresh long positions for a target of 6450 with a stop loss at 5700 on the downside.
All right, okay. Thank you so much, Aditya, for joining in today. So those are some technical bets, but yes, it could continue to be a choppy market today. That has been the case for last few trading sessions. So we'll slip into a break now. Nikhil Bhandari of Goldman Sachs will join us next to discuss the latest trends in battery prices, the energy space, and the power space as well. Stay tuned for that.
Welcome back to Midcap Radar. Well, as promised, we are joined now by Nikhil Bhandari, Head Asian Equity Research and Co-Head of Asia Pacific Natural Resources and Clean Energy Research at Goldman Sachs. First up, thank you so much for coming to our studio, Nikhil. We have a lot to discuss. You've come out with a very interesting report as far as battery storage in India is concerned. First up, give us a sense of what is the need for battery storage vis-a-vis pump storage. We have round-the-clock options currently, but largely legacy-based thermal in nature. So how do you view and how do you view the economics of the entire battery storage ecosystem?
Sure. Thank you, Vivek. Thank you, Sonal, for having me back on the show. So when we look at India's power cost curve today, the cheapest option is still the new coal pithead or mine mouth-based plants. That is still the cheapest on the cost curve. The next close is pumped hydro-based round-the-clock renewable energy. Is the second best option we have from an economics perspective. And as we think about the battery-based, storage-based round-the-clock energy option, we believe it is still not competitive against pumped hydro-based round-the-clock renewable until the end of this decade. Now, this is despite we have come up with a new report talking about battery prices are falling rapidly. We are expecting about 50% decline in battery price between 2022 and 2026.
Wow.
But despite that, we have two challenges as we think about going all out on battery storage in India. Number one, there isn't much supply chain for the batteries in India currently, and in our view, the entry barrier is higher to localize the battery supply chain compared to, say, something like solar supply chain. And the entry barrier in our view is even further rising, given the leaders are propelling ahead with newer R&D-based newer products. And second challenge is the storage for battery is still appropriate for 2 to 4 hours backup perspective. So in order to make round-the-clock renewable with battery, you need to over-deploy more and more batteries to make round-the-clock renewable energy work, which makes the economics not competitive, even with falling battery prices against pumped hydro until we go towards the end of this decade.
Okay, 50% fall is what you're expecting in till 2026, right? So that's a big fall. But in that case, if we talk about some of the supply chain issues versus, say, renewables or solar energy for that matter, where is, say, India lacking, or globally, how do we compare in the global setup?
Yeah, sure. So when you look at batteries globally, the cost curve is steepening for the cell manufacturers. That's the highest entry barrier in our view compared to manufacturing of components like cathodes and anodes, the two largest item, or compared to even just the packing of the cells. I think it's more simpler, but cell making or assembling these products into cell is the hardest step. To give you a bit of a context of the lay of the land, today 5 companies globally cover nearly 80% of the global battery cell production, so it's very consolidated.
And I'm assuming most of them in China.
2 of them China, 2 of them Korea, 1 in Japan.
Oh, okay.
Right? Okay, so that they've been in the industry for over 20 years manufacturing batteries. I think there are 2 or 3 issues there. Number one, it takes about 10 years from start of R&D till production, a start of production for battery. Number 2, skilled labor has been one of the challenge in the battery industry globally. And number 3, after getting the production as well, mass production is another skill set. Balancing 10, 15 different items going in a battery that gives you smaller pack with a lot of energy, good charging, discharging time, good density, safety, taking on everything in a smaller pack with a lot of energy has been hard at a mass production level. So that's the challenge that we are seeing in terms of the entry barrier in the battery space.
Nikhil, what we have to look at eventually is that discoms have to buy power from players, who are generating power using this particular technology. Now, going forward, do you expect, battery prices to fall enough for them to be competitive versus, thermal or even other forms of energy that we are seeing like pump storage or even solar or wind? So when do you see that happening, and do you think the investment is worth it?
So there are certain cases where battery storage-based renewables is becoming attractive. For example, when we think about the power shortage, one of the solutions has been use the previously depreciated stranded gas power plants and run them as peakers in the evening when the sun isn't shining. Against those, the battery-based renewable energy is already more attractive in India's context. However, against pumped hydro-based and against coal-based energy, which is round the clock, we do not believe the economics is attractive until the end of this decade.
Oh.
Okay. Moving on, the other question which I want to ask you is recently, there was a draft notification as far as bringing in Almm for solar cells and solar modules is concerned. How do you view this particular development for the solar manufacturing ecosystem in India?
Sure. So just let me add a little bit of context here. When we think about India's new energy setup, there are 2 unique things. I've mentioned this before, just want to bring it up again. One is India's got a unique power grid. It's fully connected, it's new. It helps to optimize the locations of the renewable. I can set up solar, wind, pumped hydro at different location and supply a combined power to another company sitting in the other location in the country. Right. The second unique aspect is the power cost curve is attractive for renewables in India because the power prices are higher compared to places like China. So even when I do solar generation cost is cheaper than China, power prices are higher than China. That take solar, make it round the clock. It's attractive and selling power at 6 to 8 rupees in India. However, the challenge is India doesn't have the supply chain. There is no self-sufficiency of the upstream product like solar. So we started first with module. It's a relatively easier step in the whole supply chain with least entry barrier. And with the help of custom duty, ALMM, PLI, India has gone ahead in becoming almost 40 gigawatt module capacity by last year from very, very small number before. Cell has a higher, if we go backward, we need cell, then wafer, then polysilicon.
Right.
In case of cell, the technological complexity is higher and the capital intensity is 3 times more than module. Okay. So it takes time. But India, 3 years ago, we were 1 gigawatt cell capacity in India. Now we are 6 gigawatts, so it's developing. So it makes sense to bring in ALMM and makes the price protection argument for the cell makers who are doing work to advance and achieve the self-sufficiency. So clearly, it seems government is focused on the self-sufficiency of the solar supply chain. We go module first, we're now going cell. Eventually, it may make case to do the same thing for wafer and polysilicon.
So do you think PLI, then we have ALMM, then the customs duty for solar modules and cells as well that government spoke about earlier, that is something which is required for the industry to grow? Then if it doesn't happen, then good times won't last. Is this fair to say that?
I think initially, yes. I think this is an industry which is dominant out of China, controlling 90% plus of the supply chain, and they have a cost and scale advantage which you can't replicate immediately in a very short span of time. So it makes sense to provide a duty-related price protection, capex subsidies, and these measures like ALMM to let the industry grow first, give it 2 to 3 years, and then achieve a scale that you can compete with the likes of China and other regions in manufacturing cost. As I said, India has a good setup on grid and downstream economics. We need to plug the self-sufficiency gap. So I think that it makes sense to give those kind of benefits for the medium term, but eventually that'll help to make a fully self-sufficient, round-the-clock renewable energy system for India, which will not compete just at a solar module or cell level. It'll compete more at what is my integrated round-the-clock renewable energy cost in the power cost curve versus the other country, and can I make more green molecules like hydrogen out of it? Yeah. Because the biggest cost of hydrogen is electricity. You need round-the-clock renewable electricity to make cheap hydrogen, or can I make cheaper green power that gives decarbonization as well as lower cost solution for a lot of enterprises in India? So I think that in an overall context, I think that is the ultimate business model, fully integrated end-to-end, and then eventually making green power or green molecules out of it.
Makes sense.
Nikhil, we are having this conversation in the context of equity markets actually celebrating a couple of recent listings. We had Premier Energies that listed at a significant premium to, what was the IPO price. We also have started seeing analysts now pricing in Tata Power solar module business. In this context, what kind of players do you think can benefit, across the solar value chain, as well as what kind of players, rather, I know you can't take out individual names, but what kind of players, what kind of manufacturers will actually benefit?
Sure, as you mentioned, so I can't talk specific on the stocks here, but I can provide a bit of context here. The important thing is to look at what is the ultimate bottleneck here, because anybody on top of the bottleneck will end up eventually overpaying, and that's where investors needs to be eventually be mindful of. I think the initial setup in the medium term, the bottleneck has been the cells, and I think cells in 2 to 3 years time, the cell bottleneck will be over as well. The biggest bottleneck today is polysilicon outside of cell, right? We are importing currently 100% of pretty much most of the polysilicon required to make the modules. Polysilicon is very high energy intensive, needs to be on larger scale, and needs to be really pure to make an ultimately good cell out of it. So I think those who are able to manage that bottleneck will be the more stronger medium-term winner who can do end-to-end, polysilicon to wafer, wafer to cell, cell to module. And again, this is again an industry which outside of India, for example, in China is commoditizing. So for a more longer lasting sustainable business model, we have to take that step forward, leverage on the grid to eventually make cheaper molecules, green molecules or green power out of it, right? So that's a more sustainable business model longer term. But as far as just going from module to cell, cell to wafer, these are still interesting cases to make return from a medium-term perspective.
Few steps ahead, few steps back, I think. Exactly. That is how players will have to go about it. Thank you so much, Nikhil, for joining in today. It was such an interesting discussion to understand the entire value chain and a lot more when it comes to the new energy space and the battery space in particular. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll focus on Neogen Chemicals in our Midcap Spotlight segment and a lot more stock-specific action. Stay tuned for that. Welcome back. Well, let's talk about our Midcap Spotlight segment. Neogen Chemicals is the one that I'm focusing on. There is an initiating coverage by Avendus Spark, and it's a big target price that the brokerage is looking at. With a buy rating, they look at a 3-year target price of 4,900 rupees a share. Remember, the current market price is 1,800 rupees, and that's after the 12% pop-up that we are seeing today. In the existing business, they build revenue growth of around 15% CAGR over the next 3 fiscals with EBITDA margins of 18 to 19%. But they say it's the new new battery chemicals business where the company will really do well, and it's a good time that they've entered in here as well. That's where they're building in revenues of 1900 crores with EBITDA margins of 22% by FY28. The existing business of bromine, the lithium chain, it has relatively smaller opportunity size according to Avendus, but the new battery business is where they'll see a lot of opportunity. That's where Avendus Spark is bullish, and they say export opportunity is huge due to regulatory tailwind. We just had a discussion on the battery business, how there's PLI, there's a lot of government support coming by as well. So battery chemicals will be the bigger business for Neogen according to Avendus, and that's why they're very bullish on the stock.
Well, thank you so much, number one, for putting the spotlight on Neogen, up almost 13%. A very interesting note from Avendus Spark. A couple of other stocks on the radar. Remember, earlier today we saw the news on Carborundum Universal, where the company has gone ahead and made an acquisition. On the back of that, analysts are quite enthused about this particular acquisition, and the stock is higher by close to 3.5%. Now, looking at the markets themselves, we started the show, we were largely flattish, and that's why we are planning to end as well. When you're talking about the mid-cap space, very slight moves, the range-bound trading session, and the small-cap index is marginally underperforming. But with that, it's all the time we have on this edition of Mid-Cap Radar Mutual Fund Corner. When we return.